Now, the Central Bank of Angola raised its benchmark interest rate from 17% to 18% in an effort to slow the country's growing inflation, which it intends to return to single digits in the medium run. The Southern African country has seen inflation increase from 15.01% in September to 16.58% in October. Now, joining me for more on the stories is Victoria Momoh, who is analyst at the Financial Derivatives Company Limited. Victoria, it's so great to have you on the show. Good morning to you. How are you today?
Good morning. I'm very well, thank you.
Very well, thanks. All right, well, let's begin with Angola's central bank deciding to raise MPR to 100 basis points. That's 18% per annum. Now, what are some of the factors contributing to this being the very first in the last 2 years?
So it is true that Angola Central Bank has actually increased its benchmark interest rate to 18%. And I mean, that is not surprising. And this is due to the fact that, the country actually faces the issue of inflation, as well as, the impact of the first subsidy removal, which was done, mid-year. Prior to this, Angola's economy has actually been quite stable. And in terms of inflationary pressures, it recorded deceleration as of last year and early this year, but we've seen the difference, the deviation. That is an increase in inflation, and that is notable between May and June, where the country actually recorded significant devaluation of the currency due to the fact that the central bank could not intervene in the forex market. There were issues like the decline in oil prices that actually contributed to lower oil earnings that restricted the central bank intervention in the forex market and caused the significant devaluation of the currency. So that triggered inflationary pressure. And like you said, we've seen inflation increase to as high as 16.58% in the region, and it's paramount for the central bank to actually make a move and increase the interest rate to taper inflationary pressures. But actually, this comes with quite a number of risks, as much as it has its benefits in terms of reducing inflationary pressures. There are also the risk of a possible economic slowdown, and that is due to the fact that the Angola economy is actually fragile, because as at Q2 2023, it grew by 0.01%. So there could be, a risk of further slowdown of the economy due to the increase in interest rates. But of course, one needs to tackle one issue and trade off another issue. You get, so in order to taper inflationary pressures, I think Angola is ignoring the risk of a slowdown in economic growth, just like the US economy as at last year, when they kept increasing interest rates with the sole aim of tackling inflation. So I think that is the area that the Angola economy, or Angola Central Bank, is actually looking towards, and that is why we've seen the increase in the benchmark interest rate recently.
Absolutely. So it's strictly reactionary to say this is what's happening and this is how we're going to tackle it in spite of the ongoing situations. But let's look at Ghana now. Very interesting developments there. $800 million for COCOBOD compared to other annual loans. Let's talk about the importance of that. And of course, what are some of the challenges that COCOBOD has been facing in relation to raising funds over time?
So the thing is, post-debt restructuring in Ghana has not, been the same for Ghana, and that is in the aspect of, having access to financing from international investors, because, Ghana relies so much on international investors as well as domestic investors in terms of accessing finance to, take care of some of the domestic challenges that is facing, that economy. But that aspect of restructuring has actually, had an impact in terms of attracting this financing into the economy, and that is why we've seen that the $800 million that was actually gotten was not like the exact sum of money that was needed. The total sum of money that was actually needed was about $1.2 billion, but they were able to only secure $800 million from these international investors, and that is to tell you that they are having some sort of skepticism from the Ghana economy because of the challenges that the economy faces. And then this Ghana economy actually hopes to get the other amount of, that's about $400 million from domestic investor to make up for the $1.2 billion that is actually needed to procure cocoa beans from the farmers. And what is actually worth noting is that usually annually. They actually get these loans annually from investors into the country, and there is an average rate of 2% interest rate attached to this loan. But we've seen the increase in interest rates, about 8% now attached to the loan. And that is actually the highest in the records of this syndicate loan that Ghana gets since the loan started in 1992 and 1993. So that is actually telling us that there is a risk premium that is tied to investors investing in the Ghanaian economy. And in the aspect of even getting this particular loan, we've seen that there was a slight delay in getting this loan, and as of last year, they usually get the loan between September. By September, the loan is actually being gotten so that they can take advantage of the harvest season that actually begins in October. But we've seen that delay, and is expected to get the loan by the end of November, and in order to take advantage of the rising cocoa prices and all, and that would basically to some extent help the economy to get financing to solve some of their domestic problems.
Right, very important developments there for Ghana, and hopefully this will stimulate the necessary liquidity requirements for the Ghanaian Cocoa Board as well. Victoria, we have quite a bit to talk about, but unfortunately time is not on our side, but many thanks for joining us on the Global Business Report today.